The speakers earlier were pretty optimistic there'll be more stimulus, that the worst can be averted, so that deflation ain't coming.
Yeah, so we are also very constructive on China. We do expect more stimulus to come. We're expecting actually a comprehensive measure rather than just trying to just prop up the economy, but much more going deeper into the problems and solving for the long term.
So the measures for the property sector, which we saw overnight, were steps in the right direction, but you know what? Investors are not buying it.
Yes, I think there's a level of pessimism we think is unwarranted. We do expect more stimulus. And at the same time, if you look at the labor market, I know we talk about high unemployment rate, but there's been increasing hours of working and it's slowly mending itself. I think we need to give it time to show in terms of some of the improvements that we'll see later part of this year.
Can China still achieve its 5% growth target?
Absolutely. We think it can definitely achieve 5%, if not higher.
Okay, well, that's a good point to make because there seems to be, Juliana, sorry, David here, by the way, there seems to be a disconnect between what the market wants in terms of more stimulus, but certainly the market's not listening to your point that 5% they don't really need to introduce anything perhaps incremental from what's already on the table to achieve 5%. Do you think the growth target is too low?
Yeah, so I think to your point, you don't need, I think, strong stimulus to achieve that 5%. Even if we basically grow less than 1%, we're going to achieve that 5.5%. Let's say next 3 quarters, 0.9%, we're going to achieve 5.5%. In terms of the target, yes, in some ways, we need to see even slower growth to get to that 5%. That's why we think it's very, very, very likely that China will achieve that 5% target this year.
Does 5% or even lower, is that enough to absorb, particularly when you look at the unemployment problem among the youth, is that enough to absorb all the excess labor that's out there?
Well, our view is that it's going to be much higher than 5%. Our view is that it's going to be higher than what the market is expecting, and that should be able to absorb the labor market or bring it to sort of adjustment to that stability. But again, labor market, inflation data, they are lagging indicators. And so we should see that coming through over the next few quarters.